Okay. Beautiful. All right. Hey, Mike, thanks for joining us.
My pleasure, Frank.
Blaise, you want to introduce who this gentleman is?
I will. Mike Kovac, he is the Medina County Auditor, and apparently he's been this for 30 years is what I just learned. That's a long time to hold a position like that.
That's a lot of gas pumps to put stickers on.
They said I got to keep doing it till I get it right. So that's good.
It's a position that you're elected into, correct?
That is correct. Every 4 years. So yes.
So let's say right now, vote for Mike.
Vote for Mike. There you go.
Good.
Well, do you want to be reelected at this point? 30 years is a long time.
Yeah. Actually, you know what? I still enjoy it. I work with wonderful people, and I grew up here. I mean, this is home. So I've done a lot worse jobs than this. Let me put it.
I think we all have, right?
Well, Frank and I have been doing this, doing real estate for combined, I think 50 years between the two of us. He's more than me because he's obviously way older.
Obviously, right.
We've been getting a lot of tax questions recently, and I don't feel like I'm 100% certain of my answers. And I was going through my Facebook feed. You came up, and I was like, "This is the guy to ask." So we've got a bunch of questions for you. And we're just gonna get started. So Frank, do you have the list up in front of you?
I just have one question. Do we really have to pay taxes?
You do not. If you would like to retain your property, you should pay them. But everyone has. This is America. You have that choice. You have that right. So yeah.
All right. Hey, well, the big question is somebody buying their house. They want to know, are my taxes going to go up immediately because I bought the house? How does that work?
It varies. It's a timing issue. And just like any good lawyer will tell you, it depends. Like this year, we're going to be in a state mandated reappraisal year. So we will definitely, if you buy your property this year, you're probably going to see that reflected next year. And it also has to do with the difference between what we currently have you valued at and what you purchase it for. Most sales are not going to affect you in the coming year, but if we have a property that's valued at $200,000 and it might sell for $350,000, we're going to make some assumptions that there was remodeling done or something was done to that house to change that, and so we may pick that up earlier than on a 3-year cycle.
Okay. Now so the cycle is 3 years, right? Is that what happened?
Correct. And one of those 3 years, it's an in-depth reappraisal where we actually go out and view all of the property in the county. This one coming up in 2022 is what's called a try or an update appraisal, where we just look at sales and compare them to what we have property valued at and make overall changes based on that.
Okay. When you do the full one, do you actually go out to the property?
We do. They did just recently change state law where we are now able to use some electronic formats of houses. Aerial, we have got very good aerial photography now with which we can measure and do things. But we still view probably 2/3 of the properties in the county, and we use technology to adjust and measure and take a look at the rest of them.
Are you going inside all these homes, or are you just walking around them? Or
we do not typically we don't go inside a home unless we're invited, and so that is one difference when you look at our records of a house. All the measurements that we do on property is from the outside, and that's to keep it consistent. So you may see some differences on our wall measurements and on our square footages slightly, because we're doing all measurements from the outside, where a realtor is doing those measurements from the interior.
Okay.
Do different counties or cities or even townships calculate how they do their county or do the property taxes differently? So if Medina County being right next to Summit, is it pretty much the same, or is it different across the board?
It's pretty much the same. All county auditors in Ohio use a system called CAMA, or Computer Assisted Mass Appraisal. So the way we do it, we use pricing schedules. So we have to assign a value to every possible aspect of a property, house or, commercial, industrial also.
Well, that's
And
right,
then-
you do commercial too.
Yes, we do. All the commercial
didn't think of
and
that way, yeah.
yeah, and the vacant land. And so we use a computer program with a pricing schedule that we build up. And so we have a cost or a value for each facet of a home. And then we send these data collectors out to do the measurements, to take a look at the house, to determine the quality and the grade, the condition, anything that may have changed. And then we use that data that we've collected on the houses and put it into the system, and it comes out with the value. And we also do studies on land. But that's very similar between, say, Summit in Medina, Wayne in Medina. You're always going to have some differences. It's just like if Frank, you and Blaise did a current market analysis of the house, you're very rarely going to come down with the exact same figure,
Right.
but you're going to be close. You're going to be within a range. And I think it's safe to say that's very similar to, the different counties around the state also.
Are all counties on a 3-year cycle?
They are, but they're on different 3-year cycles. So there's about 18 counties, I think, who do it on the same schedule as us in Medina. And then obviously the rest are parceled out.
Okay. Blaise, you have a question?
I do. This is one that we kind of know the answer to, but I want to have it for a video. Is what is a homestead exemption and how do you file for it?
There's that terminology is used in 2 different ways. There's one, it's called the owner occupied exemption, sometimes referred to as the homestead exemption. And that is available to anyone who owns and resides in their own home. And it is something less than 2.5%. Now, the homestead exemption that many people refer to is an exemption that is only available to people 65 years of age or older, or permanently and totally disabled. Yeah, you and me both. That's right. I just turned 60, and your whole, it's like, oh, wait a minute. I qualify for lots more discounts now. But for the homestead property tax exemption or reduction, 65 years of age or older, and you have to have household income of approximately $33,600, $33,800. And that does not include your Social Security. It's essentially your adjusted gross income on your Ohio income tax return. And that saves you, that reduces the valuation of your property for tax purposes of $25,000. And so whatever the tax rate is in your district, that comes off. So that would be the homestead exemption that most people refer to.
Okay.
Interesting. So the one that you mentioned first, the 2.5% reduction, does that happen automatically, or do you have to register for that if you occupy your property?
That is one that actually you have to apply for. Now, oftentimes on existing property, at the time of transfer, the title agency may mark that so that we have that. But where we miss a lot of people is on new construction, because at the time of transfer, you're only dealing with vacant land. And so obviously people are not living on the vacant land. And so a year later, 8 months later, they move into the property and they forget to file their owner occupancy certificate. So we send out a mailer at the time of transfer, but it gets lost in the shuffle. So it actually is a reduction that people have to apply for.
So good reason
Wow.
to reach out to any new construction a year later.
I think I know the title of this little snippet of video already and what the title is going to be on YouTube or wherever we put this thing, because essentially that's found money.
Yeah.
If you have to apply for it, I've lived in my house for 20 years. I've never applied for it. I'm going to be bummed when I go in there and it was,
You're
I should have registered. I should have called you 20 years ago because you were doing this job back then anyway.
Well,
You very well may have it. You very well may have it. It's often overlooked, but again, the place that gets missed most is on new construction. So if you built your house 20 years ago, it's possible, but I'm willing to bet that you may have it, Blaise. In fact, I can probably check that.
Mike, back to that owner occupied exemption. Here's a question. We do a lot of business with investors. So if they're buying a house that is presently owner occupied, and I'm looking at the tax bill and I see the exemption is on there, once they buy that property as an investment, they're going to lose that exemption, correct?
Yes, they should.
So
Yes.
even if the tax bill doesn't change right away, their payment be affected fairly soon.
Well, and again, keep in mind that in Ohio, we tax a year in arrears. So the tax bill that we got in January, the tax bill that we're going to get in June in 2022 is based upon what was there as of January 1st, 2021. So when let's say the investor buys the property today, next year in 2023, they are still going to see that owner
They're still paying for the previous year. Okay, yeah. So
and the proration of the taxes somewhat takes care of that, but never completely.
right. So it won't affect them for another year out, but it is something to keep note of that they are going to lose that exemption if they're buying a presently owner occupied property.
Absolutely. Yes.
Okay. That's good to know. That's real good to know. I'm looking at my tax bill right now just to make sure I have that.
Blaise has his owner occupied. Saved $60 a year. So yes.
Nice.
All
So,
right.
Next question is CAUV. What is it? How does it work? Speak the wisdom that you have up there, 30 years experience about the CAUV tax exemption.
CAUV is the current agricultural use value of property. And the philosophy behind that is that, and it quite frankly, it's true that agricultural property uses far less services than, say, residential property. And so it should be valued differently than investment property. And so the state instituted a program where the valuation of CAUV land is valued at the price of the crops that they produce. And so if you are a commercial farmer, and that means you have receipts, you file taxes, you keep records, you manage your property in a commercial way, then you can qualify for the CAUV program. And the valuation of the property is based on the soil types that are there. And so we have soil maps for all of Medina County, and obviously these soil maps go across the state of Ohio. And based upon the soil that's there and what you're doing with that land, that determines the valuation that you pay taxes on, rather than the open market value that we typically use to establish value for taxation.
I got a question, and this may have been answered partially in your first question, but if I'm looking at a tax evaluation on a house, and let's say the tax evaluation is $220,000 between land and the real property on there, and yet today's open market, I can get $315,000 for the house. Now the house is not for sale. I'm not getting 315, but that's what the open market would pay for today. Does that have any play when you guys go to reevaluate that value of that property this year when you're doing?
It has everything to do with it. By Ohio Revised Code, we are supposed to be valuing property at market value. And again, we only take a look at it every 3 years, and only in depth really once every 6 years. And so what we are trying to get to, and we get audited by the state, is to market value. The state does give us some leeway within that, but everything we do is tied to market value. That's why sales are so important. And we review all sales. The state reviews all sales and checks the sales in relationship to our values to see whether what we're doing is acceptable on the valuation. So yes, we are supposed to value properties at market value, always keeping in mind that we don't set the market. The market sets itself, and then we're supposed to interpret that to establish the values for tax purposes.
Okay, so every 3 years, so you're doing the evaluation every 3 years, and one of those years is a light year, and one of those years is the full.
Yes.
And you're trying to go to what the market value is at that time. So if the market took a sudden drop, that would be affected too when you're doing your appraisals, right?
Yeah, and again, people always see it on the upswing. They don't see it so much on the downswing, but it's a 3-year cycle. We got hit in the Great Recession, 2007, 2008. We finished up a reappraisal in 2007. And so I was feeling, feeling really good about it. We were only coming in at 15%, and at the time it was one of the lowest that we had ever had. And of course, the market bottom dropped out of the market end of 2007, beginning of 2008, and it was just brutal because the state was looking at the prior year's sales to determine value. And again, we had to fight through that for 3 years. On the flip side, 2022, from about end of 2018, 2019, you've seen it too. I think we've seen the fastest appreciation ever
we've ever seen.
County. It's stunning. And so, of course, we haven't picked that up in the last couple of years, but now in 2022, we are going to see some of that value captured.
Right, but by the time they start feeling it, is actually going to be a year beyond that. As far
Your phone probably,
2023.
yeah.
your phone probably doesn't ring as much in that up market as it when the values go down, does it?
Actually, it's funny. We had some of the lowest amount of border revisions or BORs or complaints against our valuation this year because, boy, all you have to do is glance at the newspaper or look at what your neighbor's house sold for. And you guys know the values have just been going upward unabated. So, yes.
Well, let's assume somebody doesn't agree with your valuation. What are their steps to do, and what do they got to go about doing?
Yeah, every year a homeowner, a property owner has the ability to challenge the value on their property through what's called the border revision. Every county has one, and there's a form that needs to be filled out, and it's a formal appeal. It goes through a quasi judicial process. But the bottom line is it's a hearing to determine what the market value of that property is. So I talked about CAMA before, how we get to values on property, but the check on anything we do is what's the market value of that property? So what would it sell for? And so when somebody appeals their value through the border revision, hopefully they've got some type of evidence of why their property should be lower. Maybe their next door neighbor's house, which is very similar, sold less, similar type houses. It's information that realtors use on a daily basis, right? And so do we. But it's new for some property owners. But we are trying to determine, what the market value of that house is. And so, by Ohio law, the burden is on the property owner to show that. So, they really need to come in with some type of information. And we list all the sales in the county on our website. And we let people know that, so people have access to that and they can look. And then we do our own study and take a look at that. And it's a 3-member panel that then determines the valuation of that house.
Okay, we're going to take a quick break here to do shameless promotion. If you need those comps to fight Mike, call Blaise or myself. If you need to know who to vote for in the voting booth, vote for Mike. All right.
So, with all of these,
I like that. That's good.
With all of these values going up, people are finding money pretty much. I mean, because they're able to now refinance their home, take equity out, and do home improvements. So I'm not going towards sales or anything with this, but I'm talking about home improvements. If I add square footage, I put on a deck, if I do any type of home improvements and I file a building permit, is that what triggers you to maybe relook at what's been done to that house, or does that have anything to do with it at all?
It does. We receive information in a number of ways, but we receive all building permits from throughout the county. From some of the cities do their own building permits. Most of the unincorporated areas work through the county building department, planning department. So we receive all building permits in the county. We also we're out and about throughout the county all the time, so checking different things. And so sometimes those are brought to our attention. Actually, when properties sell, also, all of the information is highlighted in the MLS, in listing agreements, and it's out there. We often discover finished basements a lot that way because oftentimes finished basements don't require, or people do not file building permits. And so we find those out later. But yeah, definitely building permits are one way that we get information on changes to property throughout the county.
Okay.
Okay.
If there's a new levy being voted on,
Mhm.
how do I calculate that millage for what I have to pay if it goes through?
Yep. Actually, on our website, we have that available for you. You can find out exactly what it's going to cost you.
What is your
when
website, Mike?
when you go to medinacountyauditor.org, and I'm just getting to that. There's a little tab at the top called Tax Info. You can go to Tax Estimator. Let's see, is that the best one? Tax rates. You can also do Millage Estimator. So you go down to that, and both of them require you to put in your property value, which again, you can get from our website. And this is the property value at which we have you valued. So, you may think your property and it may well be worth 400,000, but if we have it at 300,000, you're going to, you're going to want to put that in there. And so then you put in the millage amount, and it will calculate that for you. So you know exactly what that property, that millage would cost you.
Okay. So real
So
easy.
Mike, I just pulled up your site just now. Direct to it just so that I can have it on here.
If you go to tax info there.
Yep.
Go and click on that.
Tax estimator.
Let's see.
Go down to millage estimator.
Okay.
Yeah, actually either one will work. Yes. Oh no, millage estimator is correct for the, and so right there, yeah, you'd put in your property value, and then you would enter the millage amount, and then just click enter, and it would take care of that. So.
Okay. Give me an example of the millage amount in the city of Medina.
Stay there for 1 minute, Bill. Please.
You guys are both playing that game. Actually, you can just put 2 mills down. So this is an estimate of a new voted levy. And so you put that. Yep.
So that would cost $210 per tax year.
Your property value and property taxable value. What's the difference there? Oh, that's the part that, because it's taking out like the land or whatever else for.
That's you enter the property value, and that's the appraised value. The property taxable value or the assessed value is simply 35% of the appraised value or the property value. So it's an extra step that just confuses people, but it's required under the Ohio law and constitution. So that calculates it for you automatically, because nobody understands assessed value or tax value. Most of us understand market value or appraised value. So yes.
Which, speaking of that, Blaise, can you just go back to that screen one more time?
Sure. Yeah. Hold on one second. Let me share it again. Okay.
So as a consumer, if you're looking to where you can get what the auditors appraising your property at is right there under real estate, you can look up your property address. Yeah. And from there, they're going to show you you can look up by owner or by street number, and it's going to show you what they're appraising at. So not necessarily what you think your property is worth, but what they're appraising it at.
Correct. Yes. This is our value. And the majority of times we are undervalued. I mean, nobody believes that, but particularly in times of rising values, because we are always behind the curve. And typically real estate values rise. Actually, the Great Recession, 2008, 2007, was the first time, certainly under that I've been here 30 years, but the first time that we had seen property values reduce in Medina County in known history.
One of the beautiful things about our market area, though, is even when it appreciates, it doesn't appreciate like the coast or anywhere else. But when we drop, we don't drop like them either. We may have come down, but we don't crash and burn.
Yeah. And even within Northeast Ohio, we went through that Great Recession. I mean, it was brutal.
Oh yeah.
And a lot of, in a lot of the urban areas, I mean, property was just let go. The banks did not even contest it because they thought it was worthless. But we we never got to the point where foreclosures set the market value in Medina County. There was always value to Medina County real estate. It certainly had dropped, but the property was still selling for far above foreclosure values here.
Right. That's actually when Blaise got into real estate, is right when the market fell apart.
Tough time to be a salesperson then, yes.
I won Realtor of the Year or Rookie of the Year that year. And the only reason why is because I was the only idiot that got into the real estate industry. There was no competition.
Yes.
Hey, Mike, if I decide to rent my house out, how do I change my mailing address for my tax bill?
Actually, you can reach out to us via email or give us a phone call. Typically we require something written. And so you can do that through us or through the treasurers. But email works. You can also mail it in. Typically, if you call in, we'll request it to be some type of written format. So we don't just do that on a whim.
Okay. Mike, is my house taxed more if it's a rental and I'm an investor or non-owner occupied and it's producing income than it is if I live in it?
Not necessarily, particularly on single family homes. Because as you know, like when you go to list it, the CMA that you do on a single family home is going to be very similar. You may take a different look at that based on the income being brought in. So you could look on an income basis, but in most cases, it's still going to be determined by similar type sales in the area. Now, and again, this is different because when you get into, say,
commercial
duplexes, but 3 or 4 units, you're more into a commercial situation where the income that they're generating is going to be much more likely to determine the value of that property than comparable sales, simply because there's not a lot of comparable sales for some of those categories.
Okay. All right, this was good.
So here's some more questions as far as new construction goes.
Mm-hmm.
When you start out the process, obviously you got a blank canvas, a piece of land, and there are vacant land taxes on that property. During construction, they start improving on that property. At what point do taxes kick in on the finished product? Is it triggered by the occupancy certificate, or is there a certain time after the builder lets them move in? What is it that triggers that, and how does it work? And does it go retroactive to charge for those taxes sometime during construction?
And how is that price figured out at that point?
Right. Okay, lots of questions there. And actually, new construction, we could spend the whole thing on new construction. But one of the questions is, we pick up new construction at 50%. And keep in mind, our tax lien date or the date when we determine what the value is or where you're at with construction is January 1st. And so, again, depending when you start that construction is going to affect when it gets picked up. So conceivably, and actually I learned this from my little brother long ago, he said, oh yeah, we always try and start them just after the beginning of the year, because that's going to raise out into the future when the taxes are collected on that. So, right. But say you start something in September, you're 50% by the beginning of the year, you would pay on 50% of the taxes in the following year. And the occupancy permit is typically what triggers the 100% completion, but not always, because, believe it or not, in 30 years and tens and thousands of new constructions and different items, people will sometimes play games. They will not finish. They will not finish the one wall of this closed screen porch to try and say it's not 100% complete. But generally, the occupancy permit is the triggering date for a 100% completion.
But you do start at 50% completion. You start raising those taxes.
Correct. We start picking them up. Yeah, we start picking up the value. So now the other thing, something to keep in mind too with new construction, and particularly for buyers of new land for construction, oftentimes with new construction, and we still do have a lot of land converting from farmland to new lots, a new buyer wants to be careful because, again, on a timing thing, I'll run you through, say the developer bought that lot in February of 2021. put the new lots in, sold the new lot to this person, and they got their own builder, before the end of the year. Well, when they go to the proration of taxes in the contract, the builder is prorating taxes on, a third of an acre of farmland. And the taxes are $13.20 because we had it valued at, $3,000 per acre, $1,000 on that. Now, when the property owner gets that bill, and again, that the timing doesn't quite work out here, but he can get a bill for property valued at 60,000, whatever a new construction lot may be. So if you're a realtor out there working with people buying lots, something that you may want to change in your standard boilerplate contract on new construction is to prorate the taxes based on the sales price rather than prorated based on the last available value.
How do you pick up the sales price on new construction? Because often you don't have the sales contract, do you, from the builder?
We often, well, every conveyance in the county comes through our office. So, and also on new construction, they all have to file with the building department. So the building permits, we get all the building permits. So we have a reasonably good idea of the cost of construction. Of course, those are not always accurate, but we oftentimes have those available to us. And we also have a very good sense of what the market is too, because unless it's a whole subdivision done by a single builder, you're going to have different sales available throughout that subdivision too.
Okay.
Yeah, we piece it together with every piece of available information we have. So sometimes we have contracts, sometimes we do not. We almost always have the permits that are filed, and also we have sales of other new construction homes in that area, as well as lots.
Okay, good.
Okay, I think my last question to you for this go round, because we're going to let you off the hook and not take too much of your time today, but what's the most common misunderstood element of homeowners versus how you tax? What's that question you hear the most as an auditor?
People always want to talk to us about taxes, and really they need to be looking at value. While we are the people who calculate the taxes, our main job is to set the value of that property. And so, you could have the same house in Medina City School District, same exact house, and let's just say same value, although that doesn't always work out that way. You put the same house down in, say, Homer Township, same value, and the tax rate is different. So, you could have very similar houses paying significantly different taxes because they're located in different taxing districts. Right. And there are also different tax programs, the homestead exemption program. There's a disabled veterans program that can affect people's taxes also. And also even a timing question. We'll often get this from people in new subdivisions. I'm paying, much more taxes than my neighbor. Well, their neighbor may not have been picked up at 100% yet. So
they're throwing their neighbor under the bus. Isn't that terrible?
Well, it does happen. And again, they're concerned with their tax bill, and it should be an issue of fairness. But they're, and often, sometimes too, someone may have paid $400,000 for their house. Their neighbor paid $360,000. You're paying more taxes because you paid more for your house. Even though it may be, similar type houses, the interior modeling, the quality of the interior can be vastly different between two houses, and that often shows up in the sales price.
Okay, so if I hear you correctly, what you're saying is if you need the value of your house checked, call Blaise or Frank, right? And if you're voting for auditors, vote for Mike.
I can't say that either since I'm sitting in my office, but I'll leave it at that. I cannot say that. You certainly can.
You said that was my last question, but with what you said, it generated one more question for me.
Hey.
So as realtors, when we're going through our checks we always look for a homestead exemption, but we never look for that disabled veteran exemption. So, and I don't know a whole lot about it. And I'd like to create one of these videos because I'm a veteran myself, and I'd like to get it out to other veterans to be able to say, hey, this exists. What is that program and how does it work?
And that's covered, as you look at the tax bill, it's covered under the homestead exemption program also.
Okay, good.
But if you are a veteran and you have a service-connected disability that's permanent and total, you actually get $50,000 removed from the value of your property for tax purposes. So that's twice as much as the standard homestead exemption. So, but it is only available if you have a total and permanent disability that's service related.
Okay. Yeah. I think that's something that needs to be passed,
And that's recent. Actually, that only went into law 2 or 3 years ago. So, yeah.
I don't think there's enough people that know about that, to be honest with you.
Mike, and there's another layer to this. You being a veteran also, and you probably have seen this. There's a lot of veterans that they do have that service connected disability. It's 100%, but they don't want to necessarily claim it because they feel like they got out of whatever that situation was more than what somebody that may have lost their life in that same situation. And they don't file for these reductions. You served your country, you laid your life on the line. It is something that they should be able to file for and get that deduction. Would you agree?
Absolutely. And we work with the veterans organizations throughout the county, as well as the county veteran services offices. So we put that out through those channels also. And absolutely, if you're in a situation where you've been totally and permanently disabled through your military service, you absolutely deserve that reduction, if not more. And I've told that to more than one veteran who's come through our office and got them to make sure they filed their claim.
All right. Well, thank you, Mike, for your service and in the military, but also thank you for your service to us today and educating us on a bunch of this stuff. I'm sure we're going to have more commercial or more questions in the future about this stuff because you got my mind spinning. So we may call you again and ask for this again, but we've got plenty to work with right now. Frank, do you have anything else?
Vote for Mike.
Vote for Mike.
And let me just add, taxes are difficult. They are difficult. And so clearly, if they've got questions, individuals could reach out to their realtors, but anybody can reach out anytime to us here at the auditor's office and even ask for me if they like, and we will certainly explain any of the questions they have on their taxes here in Medina County.
Yeah.
30 years is a long time, Mike. What's the record? What's the record for auditors? Who's done it the longest?
Actually, if I am reelected this fall, I will be the longest serving auditor in Ohio. There's 4 or 5 guys in front of me, but they're not running this year. So I will move up to become the senior emeritus auditor in Ohio.
Oh, that's awesome.
That's not a reason to vote for Mike coming up. There's no better one.
Yeah, I started keeping track a few years ago. It's like, I'm getting up there. Where am I at? So it started falling away. And so, if I'm still here in November, I will be the senior auditor in Ohio, which I think is pretty cool.
I think it's real cool. And Mike, we appreciate you devoting so much time to us here today.
My pleasure. Anytime, guys.
Thanks,
All right.
Mike.
Take care.
Have a good one.
Bye-bye.
Now watch, he didn't ever hit